Morning, Chris. How are you doing?
Good morning, my friend. I'm very good, thank you. How are you?
I'm great. This is Brian Jones. I'm here with Chris Hood, professional trader, world's most interesting man. And so
Well,
you
I tell
guys,
you what, world's most interesting hairstyle is coming back. So I apologize to everyone. This is a COVID haircut. Doesn't make sense. I'll
it's
give it.
okay. Everything's excused when you're in lockdown.
Man, my son has really mastered the filters on Zoom. And he came in the other day and he was putting on little glasses on my face and he was changing my hair. And he
Yeah,
said, Dad, you should really put a proper background at the back here. So I was going to do the virtual background of the beach with
right.
the palm trees. And I was like, man, I can't do this stuff. He put little rabbit ears on my head. And I was like, how do you get this off? Get it off. So, sorry, guys, you have to put up with this hairstyle for a few more weeks.
Kids do a lot of stuff with computers that is amazing.
These kids, he's 8 years old. He gets onto his Mario Kart and he just beats everyone. He's found these little tournaments where you can go online and play against guys in Hungary and Czech Republic or whatever. And he just beats the living hell out of these guys. I find it fascinating. He's 8 and he's hand-eye coordination. You know,
Yeah, it's definitely a interesting how how you can get smoked by a kid that's not even hit puberty yet. It's funny.
I've got my little image, and it looks like me because they built, my wife and him put it together, and it looks exactly like me. It's grumpy, he's got a cane, doesn't walk very well, got jiu-jitsu hips. And I get in those games, and I really get excited when I start to win and stuff like that. So it's fantastic. If you've got Nintendo, look up my son. His name is Magic with a K, and it's a lot of fun. We do it every weekend. It's a lot of fun.
Awesome. Well, your Alpha Hunters paycheck trade webinar went off really well, and
Oh, thank you.
yeah, people can still check that out. You can go over to rogueinvesting.com /alpha and check out the Alpha Hunters paycheck trade deal. It's a really good deal that we've got going right now to get into this. So if you like what we're doing here, you like Chris's info, definitely go check that out.
I'm really excited about it, Brian. The thing is, we're entering into a phase of the year where the market tends to sort of drift sideways. And if you have a naturally bullish bias to the upside and, liquidity starts to dry up, and what we find over the summer is that volumes traded becomes a lot thinner just after Memorial Day. So you need trades that are going to let you win if the market drifts sideways, right? And that's a primary focus of us in the alpha product, is to look at ways to win when the market doesn't really move up. And guys that are going out doing long calls or highly directional plays over the summer months without really looking at the sort of macro picture are going to find themselves struggling a little bit come the end of the summer. I'm a little nervous for the end of the year. Quarter four statistically tends to be quite a hard quarter in the year of a president that comes in, a new president. So you've got to bear that in mind. Your weightings need to be correct. We've already had a bearish crossover on the Dow for the sell in May and go away kind of strategy. A lot of people sort of poo-poo the idea of the sell in May and go away. And there's a little bit of truth to it. When liquidity starts to dry up, anytime you go into the market looking to sell something or exit something, it sort of can lead to more downward pressure on price because there's no one there. There's no one really, around to sort of snap those opportunities up. So rallies tend to be very, very short-lived over the summer months, and you've got to be so careful. The summer months, for me, historically, have never been that good. They always tend to be a sort of 50-50 if you're lucky. So for any trader out there who's thinking that they're going to be able to continue with the momentum that we've had over the last couple of months, barring February, March, check out our product. Maybe there's some strategies in there that might be useful for you, or some trades that might be useful for you. We've just done our first 3 for our new clients, and that's a sort of one-to-one risk in terms of risk reward. And that's the kind of trading that I like to do. I really don't like over risking things. And I certainly don't like using my money. My wife says my pocket is extremely long and I can't reach my wallet. So, it's the same principle with trading. If you're only looking at one side of an income statement, so to speak, right? So you got the debits and the credits. You got the debit trades like the covered call, not the covered calls, but the call spreads, for example, you need to know how to fund these trades. And funding them directly out of capital increases your risk allocation. So what we try and do is balance them off. For every time we do a bullish trade, we need to be doing a credit trade where we're receiving some money in, and we try and offset the two. It works for me. It lands up being, I think over the last 3 weeks, we've used very, very little capital and generated some really nice returns, upwards of the sort of $10,000 a week using very little money kind of thing. So if that's something that viewers want to learn, join up and come and join us, and we'll teach you how to do it.
Yeah, for sure. I remember last summer, this is my going to my second summer trading. And I remember last summer it going from a lot of movement to just sort of a grind.
Yeah,
like
chops around. It chops around.
Chopping and grinding and just being flat. And I think that those trades like the one you were discussing with that rely on time decay are.
Yeah. Well, the thing is, when you start looking at setups, right? So a lot of people ask me, like, what stocks do you like to trade? I don't like trading stocks. I don't have a watch list of 150 stocks that I just focus on. I focus on sectors. So if an ETF is strong, I'll go with the ETF. I prefer to do the ETF trades than the individual stocks because they tend to be more resilient to shocks, right? So during seasons of chop, what you don't want to be doing is trading on an individual share that gets sold off and then there's no recovery. And then by the end of the year, you sort of, struggling a little bit. So sectors become more priority for me during summer. From there, I look at the setups themselves. And I want to share a screen because there's some work that I've been doing with some developers. And we came out with an indicator called the Alpha Hunter. Now, in the Alpha Hunter indicator, which is this one down here, it's a proprietary code that I've developed. And what we try and look for is underneath this, there's about 40 different signals underneath. And it's the combinations of these signals that are going to give you a point score on a trade. So a trade is either going to meet the threshold based on the 40 indicators that we have underneath. This is, overbought, oversold, price extensions above different Keltners. Does it have, is it moving averages? Are they positively stacked, et cetera, et cetera? The squeeze, what type of squeeze is it? Is the squeeze a line for a slingshot? Is it already firing off? All of these things need to be weighted and put together. And we have an indicator that tells us fairly accurately when to be in the trade and when to be out of the trade. Now, it's not a definitive score in the sense that if it suddenly goes light blue, we exit the trade, because sometimes when we trade, we want to capture the longer trend. So those opportunities, when we have the indicator go from this dark green above the red down to the blue, these often represent opportunities to add to the position, particularly if our plan is to capture long-term trades. So right now, if we were entering this trade here on CCL, I was looking at this for a long call opportunity for this week for a lottery type trade. We would be looking to do only a 1/3 position size because we have a slingshot forming on the squeeze, and we have a number of other weighted factors underneath that are saying to us, you know what, there's a price pullback. You don't really want to be sitting in a situation where you're loading up on a trade where the potential at the moment, based on harmonic patterns, is for the stock to actually come down to the 2175 level, right? So over here, you'd be adding a 1/3 position with the intention to play it to the upside based on the squeeze, but you've got to have your risk intact because this pattern is showing a decline down to here. So you've got to balance all of these things out. If you were looking to do a sort of medium-term trade, this would be a long bullish trade that we could play. We could be doing put spreads here as well. But by and large, this is a really accurate indicator for us to give us an idea of ranking trades, one versus another. It's really hard sometimes to take two trades from two different stocks and two different sectors and then compare them, because sometimes you get distracted by, but it's Apple versus, something else, or Tesla versus something else. But how would you really compare a Tesla versus an Apple? Are you comparing apples to, pardon the pun, but apples to apples? Or are you getting, is your brain taking over, going, oh, but I drive a Tesla, maybe I need to, do the Tesla trade sort of thing. And this indicator has really, really come out as being a way to eliminate the lizard brain trading mentality of opinion. One thing that as traders we try and learn is to remove opinion from our trades. We don't really want to overthink it, but we don't want to think anything, to be honest. We don't want to go, oh, but what about this? And you want to eliminate the justifications of a trade. It either is or it isn't. And this is something that's very, very, it's the cornerstone to the alpha product, is eliminating those kinds of emotional decisions and relying purely on data. So this is something that we use within the product itself. So it gives us, I think it gives us a bit of an edge against traders who are only using an opinion-based, chat group kind of mentality. If all my friends are doing it, must be it must be good. So this will certainly be helpful.
Yeah, I have a couple of friends that won't stay off of Reddit boards that are getting trying to get into options, and they're constantly talking about this or that.
It's a crazy world, man. The thing is, you can always tell the peak of a market when everyone and their dog are involved. And, I certainly see that, the amount of people who've been pushed because of COVID or because of situations, job loss or whatever, into the options space, what they have to realize is there's no simple solution here. And it is an incredibly dangerous world. You can lose your pants pretty quickly if you're following the wrong advice.
Right.
And I have a sort of statistic, and this is just anecdotal, but usually most retail traders will blow out their account 3 to 4 times before they learn a process that works. That's the sort of statistic. And when I say blow out your account, I mean take your account from your initial capital down to zero. It happens, and it happens fairly frequently. So most retail traders don't appreciate that statistic. They don't see themselves as potential losers until they've oversized the trade and lost. And then it's, maybe this isn't for me. And then they quit and give up. And that's really what you don't want to do. This is a very, very, it's an interesting journey to follow if you're willing to put in the work. But if you're not willing to put in the work and it's just about FOMO kind of trading because your buddies are doing it, that stuff doesn't last long. The easy come, easy go kind of thing.
Right. Well, so you'll probably kill me since you're my coach, but I was actually looked at the AMC and there was a squeeze on it, so I bought a call. I bought a call and I caught the pop and made like 30% on it. I was like,
nice.
I mean, it was just one of those random cheap calls. I figured I would give it a try. But I think I bought it back here like when this squeeze was on, like caught that pop
over here.
Yeah.
Look, it doesn't look too bad. I mean, at this point, the alpha indicator indicates a potential pullback buy. So, you could do it. We've got a fairly good chance of us getting up into the profit box. Here it is up at 23. I mean, that's a huge move from here to here.
People are like, it's going to 1,000. I'm like, I don't know if that's going to happen. Man.
No, I doubt that's going to go there. But I think what you could look at is certainly, short term, I think there's a little bit of price pressure down to the downside because we're underneath the Keltner channel, right? So we're trading in this sort of red zone, which is not a good zone to be in. Let me just remove that. So we're in this red zone. The path of least resistance in a situation like this is always towards the downside. So if we have red momentum within the bars themselves, the path is that way. Okay, you can see these EMA lines are starting to trend a little, they're starting to top a little bit, right? So the idea of this going up to 23 may possibly happen. The trade to do, if you're in this sort of situation where, it's unlikely that we would see this is almost like a 10 Keltner kind of move. I would probably say buy some shares. I wouldn't be doing a long call because your erosion risk is too high. Buying 50 shares or whatever it is just to get your delta to start, and then you can add something. These are the kinds of trades you want to build rather than lump all in and hope that it works. So start off with some shares. If it drops down, you could buy a few more. If it moves up, add a call. You'd have, in a proper trade plan, you would have sort of price points that you would be adding to this trade as it starts to increase. So as you start having confirmation candles that are showing price momentum starting to shift to the upside, you've got your squeeze that would fire. So the gray would go to green. You would see an improvement in this score. So at the moment, it's scoring 85. You would start to add it sort of 90, 95, 100. You would want to see an oversold buy signal, so something towards this side here. So I think that we could take out this top of 2041. It's just, how long would it take to get there? And that's why sometimes buying the stock is an easier trade, rather than the option. You could always add the options later on as the stock improves. But if you wanted to take opportunity like a pullback here, where the path of least resistance is going here, just buy some stock you can average down with your plan to get there. It doesn't mean, though, that it will. It could literally just chop here for the next 6 months. And if you're doing call options, you're dead. You're going to lose every 30 days. It's just going to erode. So sometimes the trade setup is better on the stocks rather than the option. A long-dated call butterfly could work as well. You look at the expected move. I mean, this is a fairly advanced kind of trade, but, you could look out. I wouldn't suggest doing this trade, but the idea and the concept would be, if I'm looking for a price movement up to 20, here is a $10 expected move around December. What you would do is you'd take a 5-wide fly, from here. So start off with 15, make 20 your mid strike. And what this will do is it will be very, very cheap. This is a very, very cheap way. Sorry, this one, we'll have to make it 24. Let's make it 24. So it's a very, very cheap way to play the trade. I'm going to be risking 33. I'm going to be paying $33 for potential upside of 474 if AMC can get to the 20 price point by December. $26 as opposed to putting down a couple hundred or buying a call and losing every month. That to me sounds like a much easier way to play the trade. It gives you the upside without having to put down a second mortgage on your house.
So if you're going to do a long shot trade then you definitely want to do it the cheapest way possible.
Absolutely. Well, the thing is, you don't have confirmation yet of direction, right? So this is where a lot of traders get stuck, is that while it's trending in a chop direction, it could go either way, up or down. And right at this point, we have too many signals that are offsetting each other. Buy signal, sell signal, red. The path of least resistance for me is to say this is going to go down to the downside. How far down? Can't really tell. If I look at the squeeze is firing to the upside. How far up will it go? I can't really tell. I've also then got an overbought signal here saying that there's too much buying going on, or too much buying, so we're going to see some profit taking. So I would look at this and go, well, if I think it's going to get up here, because statistically there's a high probability that the price will get to that point, I don't want to be buying stuff and then having erosion take out the value of that option contract. So buying stock and holding it for a price point of 23 might be a play worth looking at. How much you put in, that's up to your trade plan. But the option trader's cheaper way of playing this would be to use the call butterfly, a 5-wide call butterfly for December, because the December move is telling me it's going to get there. This is the December move up to here. So the previous high. So if it can take out the previous high, which is over here, then by December, that's a double in the stock, right? And remember, I'm putting down $26 for a price point of 400. That's pretty good. You multiply that by 5, you're putting down $100 for 2,000. That's a nice risk reward, right? You're not putting down a lot of money. You're not suffering from erosion. If you lose the $26, it's not the end of the world. That's a happy meal in some places, Yeah. So I think that's the
hamburger in Iceland. I found out that's
oh man, that's like a can of tuna here in Canada.
Is it? Yeah. So what? So you were talking about. I thought something I thought was interesting that you were talking about was TLT and bonds.
Oh, bonds.
Yeah, I'm kind of interested in the relationship and why you're sort of getting into that trade.
Well, the thing is this: if you look at where bonds and stocks are inversely correlated, right? So when stock markets go down, bonds tend to go up, right? And what we saw over the last couple of months was an increase in bonds that really affected NASDAQ. So those high growth stocks where we saw an interest rate increase on the longer term bonds, we saw how these stocks got absolutely hammered. We're approaching summer. The best months are probably behind us for the time being. And with that, we obviously need to look at, changes in interest rates, because when the stock market starts to fall, people tend to buy bonds. So I think that we're going to be seeing over the summer maybe a small rally in bonds. The thing with bonds though is it doesn't have these huge movements, right? So sometimes buying bonds or buying the ETFs that represent bonds, you're not going to get a huge amount of alpha. It's not going to grow. You're not going to get a $20 move in TLT. So the trade that we did yesterday was we started our initial trade. We didn't really look at the threshold here in terms of going long. What we looked at was the macroeconomic situation around gold and bonds. We've got a lot of gold stocks that we own in terms of our treasury account. So we see a potential rise in gold, and we see a potential rise in bonds because of different situations leading up to changes in interest rates, right? So without getting too technical, we anticipate a small sell-off in the market over the summer months with a rise in bonds. That's pretty much what we're expecting. So here we have a price forecast of bonds going up to around 147 to 152. We're currently trading at around 138. So we went long with our call option trade. I think that we're going to see a increase here in the alpha score, and we're going to see bonds moving up there. I don't think we're going to be, exit all stocks and just buy bonds. This is just another one of those sectoral plays that we have. We've been doing the housing sector. We've been doing metals and mining. We've got a small position that we've been building in base materials. So we look at where these sectors are rotating. We build the trade and we let it do its thing. We took some really nice money on a healthcare trade last week. We exited our corn and soybeans trades. Those were just getting a little bit too crowded. The easy money had been made, and it was time to move on. So I think when you look at the overall perspective of a sort of proper trading plan, what we try and do is trade the ETF sectors first. If you can pick up a big trend in the ETF sector using all the option strategies that you like, right? Then pick that first. That should be the easy trades. Those can be sized a little bit bigger than individual stock trades. On the individual stock trades, avoid the earnings period. Just stay away from it. It's such a crapshoot. I personally land up trading sometimes very, very small positions over earnings, but I usually say to traders that aren't in front of the screen all the day, just don't do it. You're better off just being patient and sitting on your hands than throwing money at bad ideas. And that's the way that you've got to play it, right? So you've got to have some of your capital dedicated to these trades that are going to take place on a sort of longer time frame, larger wave kind of movement. And then you need to look at things that are going to be short duration. We did a put trade yesterday on Splunk. It looked really, really weak over the weekend. This trade, we did it at 9:30 in the morning, like at the open. We did this trade. Let me pull it up. This trade for this week, the stock looked really, really weak on Saturday, Sunday when I was doing the work. It opened up yesterday at 9:30 and 1 second at the open. We bought the put option on Splunk. We paid $4.25. It went up to $7.05 already. This is a 65% return in a day, based on the signals that we were picking up over the weekend. So when we look at the trade, here is the Splunk trade. You can see how weak the alpha score is. You can see momentum to the downside. You can see it trading below the Keltners. It's already extended here between the second and third Keltner. Now, here's the reversion trade, the reversal. We've printed block 4. Now, under Elliott wave theory, the wave from 4 to 5 is the highest probability move that we have. So from this position here, whilst we're still in this downward trending channel, if you look at these little dotted lines, we're in this downward trending channel. What we're looking for now is the price of Splunk to get above the white line. If Splunk can get above the white line, we would exit the put option that we've got. So I don't know where that price will be. It could be down here. It could be down here. I don't know. But a close above this white line would set Splunk up for a breakout trade to suddenly move for this price target of 246 at some point. At some point. So don't get me wrong. I'm not saying it's going to be 246 next week. But over a period of time, the high probability trade is a extension up to the 121 extension here. And this is the box that we've created. So this would be the profit target. So a close above the price point when it breaks through the channel, we would be buying shares. We would hold the shares up to a retracement of the previous high, or an extension on the previous high. The issue is this: that could take years. And this is the danger of sometimes trading under these sort of definitive kind of outcomes, right? To me, it's not a definitive outcome until it's sitting underneath the box. I know that it can get there. I just don't know when. And you can trade multiple opportunities between here and here and make your money. You don't just have to buy and hold. What you can do is you can be trading the wave as it goes through. So it could be up and down until it gets there. And that's part of the plan. So you could identify these stocks that are trading from wave 4 to 5 and just trade strategies within those waves themselves. And that's sometimes, a bulk of what I do as well.
Is the Elliott wave indicator something that it's not in Thinkorswim, is it?
Yeah, there's a version of it for free in Thinkorswim. I have an enhanced version as well. But they do have these waves. I think they've also got versions of the harmonic pattern as well. You can use this. It's a complex, for me, it's fairly complicated because I'm not one to, follow the entries and exits the way that Elliott wave theory prescribes. It's a little bit too dogmatic for me. But in terms of identifying trend, it's really helpful for me, really helpful. So I don't incorporate it on a enter at this price point kind of perspective. I'm not that kind of trader. I prefer, if I'm in the right trend, I will stick with the trend. So right now for Splunk, this is definitely a downward trending graph. A lot of these buying signals tend to be false positives, right? It's saying buy, and then it gets immediately neutralized because the path of least resistance, since this price point, probably up here, since 208.49, the path of least resistance has really been to the downside. So when you look at a Keltner momentum channel, which is this red band that follows through, as long as it's trading below that, the bias should be towards the short side. So buying long calls when things are in the red zone, okay, you've got to be pretty confident that you've got enough momentum underneath the stock to push it through that. So it does become quite an interesting trade, but 65% in one day on a trade that we would have set on Sunday night at a price point that got filled. That's the power of this indicator, right? So that's why I like it. You can see that it's just been degraded. It's just, it's not going anywhere. And until this reaches that 70 price, that 70 level, which would be a break above this Keltner momentum zone, that would change the score. Then we start playing it to the upside.
So you're riding the downtrend or the short-term downtrend with the long put, and then you'll just sell the put whenever it switches and then start the upside.
Yeah, so you can so this indicator is pretty useful because you can use it for both long and short. So, one of the trades that I'm looking at for this week is also Carnival Cruise. Here we've got this call option already in play. We did this one also yesterday. At 12:42, it got filled. I'd set a price target of 113. I wasn't going to pay more for it. So if we look at the graph now on CCL, you'll notice a couple of things. So come on, the system's been so slow the last couple of days. So here we have the reason that I'm doing a very, very small position and that I'm not overpaying is because we have, sorry, this really bugs me when it does this. So when you look at this pattern, right, the price targeting on the Elliott wave is towards the downside. Sorry. Apologies. This will give anyone headaches. I apologize. Don't know why it does it. Let me just change the setting here for a sec. Let me just do this. All right. Let me just change that setting. So what you want to be looking at is you see the stock will be hovering. It's sort of just, you know, it's trending flat, right? And what we want to do is we want to, you see how it's just trending flat. We don't really know direction at this point. We have a slingshot forming on both the daily and the weekly. We have a rising alpha score. So we can see that there's some bullish indicators telling us price moves to the upside. We have an oversold buy signal. However, it's not a very strong trend because of the yellow line, right? We can see that because of this. So I don't know if this is going up or down. So what you do with this trade is you have to put the probabilities of it going to the upside based on these two factors. I have a slowdown in an exhaustion of the downward momentum. I have an increase in my alpha score. I'm trending just below this Keltner channel. So if I get a price move to the upside today, a close to the upside today, that's what I will be looking for. So if we switch it to an hourly, plus you also have to look at the expected move. So we'll quickly look at that as well. While that's loading, let's go and have a look here. So if we look at this trade, I paid 113 for the trade. Expected move is 115. Market maker move for today is at 39 cents. So if I price this in at 116 for this weekend, for this week, 7th of May, the option that I bought for 113 here, if we get the expected move, we'll price this option at 178. So fairly good risk reward, right? I'm not buying a huge amount of contracts here. I'm only buying 2. So I'm putting down $200 to potentially come out with, I don't know, $350, somewhere around there. So the point is, when you start doing these trades, I want to see where direction starts to fire. Now, in the case of this graph, look at how strong the hourly chart is. The hourly chart is already starting to move up. I'm already above here at 85 points. So I know that I've got the squeeze firing long. So the hour chart is supporting the daily chart. When it's supporting the daily chart, I have an idea that the daily chart's going to follow through with that same direction.
So that kind of transfers that momentum up to the daily chart.
Yeah, so what I'm looking for now is sort of a price move to the upside. I'm looking for a higher high than the day before. So I'd really like to see this above 28. If we could get CCL above 28 by the end of today, tomorrow, the trade for Friday remains intact. If this drops to below this low, below 27.78 on the close, so if we go below 27.77 on the close for today, then, you know, I'll probably not win the trade. So, you know, I'm not risking a lot. It's $200. I'm okay with that. We can, you know, we'll see how the trade develops. I might push this forward a week as well. You know, this might land up being, okay, I lose $100 this week or $200 this week, but I make $600 next week when this thing fires to the upside. So, yeah, it's another way of building these trades.
It might just be a timing issue.
Sometimes it is. You know, sometimes it's just, you're not going to win everything. You know,
Right.
I still find a lot of beginners tend to frustrate themselves with an expectation of having a solid green sheet the whole time. You know, my win rate, I'll bring it, let me bring it up. You know, in my file for last week.
They should disabuse themselves of that idea.
Oh, yeah. I mean, look, at the end of last week, so let me explain something, right? So this is our actual winnings and our performance over the last 27 weeks, right? So last week, my win rate was the lowest I've had in months, but my profit loss ratio was the highest I've had in a long time, right? So excluding these one-offs. Also, my net funding was negative. So I did much better last week from an efficiency perspective, and I had a win rate below 50%. So people obsess about the wrong things when it comes to trading. What they try and look for is, I want a clean sheet. I never want to lose. And then when they lose so big that all of their profits disappear. And, mathematically, you could have a win rate of 90% and still not make money if those 10% that you're losing is huge. So rather focus on what's important. What's important is this number here. These three are the key. How much do you make on average when you win a trade? How much do you lose on average when you lose a trade? So get that ratio. The closer you can get this ratio to 2 to 2.5, the better you are as a trader. That's the most important number. This is not even relevant. When someone comes to me and says, what's your win rate? I go, it's irrelevant. I could have a win rate of 2%, but on that 2% of trades, I made $1 million. And on the 98%, I lost 300. I had a win rate of 2%, but I made a lot of money. So, you can see how it can be distorting, right? You can't really be a good trader if the only thing you focus on is how many trades you win without considering how much you lose when you lose.
Oh, so absolutely. It makes perfect sense to me.
It takes a little bit of getting used to, because people are obsessed with, this alpha mentality, the type A personality, doesn't like being a loser kind of thing. Last week, I was a massive loser, but I still made money and I still did really well. And, if you look at our average over here, I had a huge win rate there, but I didn't make a lot of money. So this is not the thing to focus on. What to focus on is this: how much do you lose when you lose, and how much do you win when you win? So if you're not tracking this as a trader, you have a problem, because you're not going to be focusing on the right thing. So this forces you to exit poor trades quickly. It forces you to be completely objective and say, you know what, I'm out of it. I'm done. I'm not staying in the trade. I'm going to get out.
I'm getting way better. I'm getting way better at cutting the trades loose on a time frame. And
yeah, that is the skill. I'll tell you now, winning a trade, not difficult. I think the hardest thing in trading is cutting losses. The easiest thing in trading is finding winners. Like, it sounds really hard. It sounds like, what are you talking about? It's like finding easy trades that are going to win is a function of indicators and process. And if you mechanically do that the whole time, you will be successful. The hardest thing about trading is getting out of things where you've put so much work to identify the trade, you just don't want to be wrong. And that's where traders fall over. It's like, I don't want to be wrong. I hope it changes. And then they clutch onto every single small fragment of data that says, maybe there's a hope that something's going to happen. And then, bang, they lose. And then they lose 100%, and they oversize the trade. And now the trade cost them $3,000. And if you're only making $500 when you win, but when you lose, you're losing $900, you need to make 2 more wins just to make up for that one loss. That's where it all falls over, because it's a game of math.
It's frustrating too.
This is why, you go into a chat group, and the chat group goes, hey, all of us are doing this trade. And you go, well, I'm going to, hang around with these guys, and they lose. And you go, oh, well, that was just bad luck. No, it wasn't. It was called poor planning and a crappy trade plan. That's, there's no such thing in trading as the market going against you. That's the one thing that has become more apparent to me in the last year, is that the market doesn't care who you are and doesn't even care that you exist. So it cannot gang up against you and go against your position. What went against your position was you, and how you managed the position, how you sized the position, how you entered the position, how you took profits on the position. The amount of times I have people come to me and say, I had a trade that was up 80% and then I lost. And I go, why didn't you take your profits? Oh, I thought I could make more. Stop being greedy. Like control that greed. Would you rather, the last 20% of your profits that you make in a trade is the hard work. So why go to the hard work? There's nothing more frustrating as a trader than being profitable on a Wednesday.
At that point, your downside is so much greater than your potential upside.
Absolutely.
It doesn't make any sense why you would stay.
How many times has this happened? You're profitable on a Wednesday and you go, you know what, I'm just going to hold out till Friday when it expires. I'm going to make 100%, and then stock sells off and you make zero. And it happens more times than we care to remember. The reason is that most people don't know how to exit credit trades when they hit their profit, because they're always hoping they can make an extra 10%. The greed thing kills. It's dangerous. So having a trade plan that says, I'm going to sell this for a credit, I'm going to exit at this price, and I'm going to let the price come to me by putting the order in. The moment you do the trade, and now you don't even have to watch it, it will close by itself. Give yourself a gold star. That's the way that you trade credit trades. You don't try and aim for 100% on those. You're going to have maybe 60 to 70% profit 80% of the time. You're going to have a successful trading career. You're not going to be successful if you're holding, put spread trades into the week of expiry during earning seasons in summer. It's like, that's like almost doing the trading equivalent of blocking front kicks with your groin. Like, okay, the thing when you're kids and you go to someone at school and you say, I bet you a bag of chips that I can kick you harder in the nuts. And the kid goes, yeah, okay. And you go, I'm going first. And you kick him in the nuts and you go, here's your bag of chips. And then you walk off, right? That's what they're doing. They voluntarily walking up to someone and taking their money, their bag of chips, and saying, kick me in the nuts. I think I can handle it. Don't do that with your trade plan. That's just crazy stuff. Don't do that.
I've seen the karate style too, where they practice, they're taking kicks to the groin.
Have you seen those kung fu guys that get the metal rods or the wooden things that go like a pendulum, and they're standing there and it's like,
the Shaolin monks, they have.
Oh my God!
Have you seen the guys that will stand in like a horse stance, and they have they just, and I'm thinking, well, I mean, I guess there's something admirable about being that devoted to conditioning your ball, but wouldn't it be far better to just spend all that time that you were in pain and suffering and getting better at your defense?
Man, wouldn't it be better if you just said, kick me in the balls one more time, I'm going to punch your teeth out?
Yeah.
Like, I don't know. I've never really understood the fascination with people trying to give themselves calluses on their nuts.
Yeah, I mean,
I don't know, man. But look, take the lesson, right? Don't be a nut shot taker in your trading. Like, just, okay. There are better ways to trade than voluntarily taking a foot to the balls. So, we're getting to a time of the year where things get a little bit, it's not impossible to make money during summer. It's just slightly more difficult. It's like a cycling match, and now you're going up a hill. You're still going to get to the finish line. You just need to know when to stand in the saddle and when to sit down, right? And how to use your gears differently. That's all that we're doing. So I think, try and make sure that with people who are watching this, write your plan down. It's such a simple thing. Write it down and trade to it. Don't trade to what you see in the market. Trade to what you've planned to trade. Otherwise, you're going to randomly add garbage, and then you're going to have a problem, right? So, sorry, I'm looking for my stress ball. All this talking about nut shots is getting me stressed out, so I need my stress ball.
I just ordered one of those little massage guns.
Oh, my wife was mentioning that last night.
Yeah, I had a friend that had one of those, and I was messing around with it on my shoulder.
Is it good?
Oh my God, yeah.
Really?
Yeah, it's really good.
I might indulge. I might indulge and get myself one.
They have different little attachments too, so you can dig deeper or whatever you need to.
I don't want to give it to the family though, because then they're going to say, Dad, come here. And then they're going to really, drill me in the back of the head, or they're going to swap it for the electric drill that we have in the cupboard.
For sure. Don't let them do that. Don't let them do that. That won't help.
But this is it's such an interesting conversation, this, because the amount of people who sabotage themselves, through either chat group garbage. Honestly, if there was one thing I would tell people to do, is stay away from chat groups. I get the whole let's do it as a community kind of thing, and let's talk about it and all of this stuff. I get that. You know what? Do that after hours. During the trading day, worst thing you can do. Worst thing you can do. Because you'll end up forgetting all the rules of your trade plan, and you try and copy someone else. And you don't have any clue what that guy's been doing. You don't even know what his position is. He's telling you something. He might be lying through his teeth. Just kill it. That's the way I would do it. I would just cut them all off. I don't go into any chat groups. I'm like, no, I have a trade plan. I work it out the night before. I watch, certain macroeconomic opinions, get me some ideas, and then I'll go and look for things in line with my trade plan. That's how I do it. And it works. You've seen the daily file that I send through to you guys.
Right.
That's not based on any chat groups. It's based on, this is what I've got. This is what I'm doing. This is how I'm going to manage it. And then I stick with that. And it helps a lot.
Yeah, seems to be working. Well, Chris, the bell's about to ring, so I'm going to let you.
Awesome. All this talking about nut shots has got me feeling a little queasy. I might have to go and take 10 minutes just to relax.
Just roll your foot out,
I'm rolling it out.
So
awesome to talk to you again, Brian.
Absolutely. You guys go ahead and check out Chris's product, Alpha Hunter and PayCheck Trade, over at rogueinvesting.com /alpha. And we'll be back here again next week talking more about markets and nut shots and whatever else.
No, we'll try and avoid the nut shots next.
All right.
I'm feeling nauseous already. Take it easy, my friend. I'll see you next week.
Hey, take care, Chris.
Cheers, buddy.